Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah, and our guest today is Jiten Doshi, co-founder and CIO of Enam AMC. It's an absolute pleasure, Jiten, to have you on the show. Thank you for taking the time out.
Thank you so much, Neeraj. My pleasure.
Uh, Jiten, can you just, we're talking for the first time on this platform. For a lot of our viewers who have obviously heard, and your reputation precedes you, but would love to understand how you guys think about the investing process at Enam AMC. Can you briefly just tell us how do you think about this?
Well, Neeraj, I think there's no rocket science to investing. It's a very, very simple process. Our philosophy is clearly to marry business quality with growth and margin of safety. And over the years, I think we have practiced that tirelessly, and that has resulted in some very strong results for our clients. Our philosophy is to identify high quality businesses at a very reasonable price that are structurally well positioned to deliver very strong growth, have sustainable competitive advantages, and are run by managements that are very, very competitive and also believe in shareholder value creation through corporate governance. So I think it's a very simple process, and I think day in and day out we continue to follow the same thing, and that's resulted in very strong growth for our clients.
Okay. So how do you think of the current investing landscape in light of the fact that you're following those four pillars of investing that you're talking about, but just that the bunch of uncertainties, both global as well as local, they are always there, but they're probably quite high right now?
Well, I think it's Neeraj, it's a very clear thing that market is always going to be full of uncertainties, and these uncertainties create opportunities. And what we are very pleased to say right now is that the uncertainties are no more domestic; they are all global. A decade ago, we were very worried about what was happening in India. Those uncertainties were actually big spoilers for us because we had no direction where India was heading, where was the country heading. But I think our Honorable Prime Minister, Mr. Modi, has done a fantastic job in creating an environment full of confidence. And I think for the first time, I believe that our challenges are external and not internal. So these challenges, which are external, I think we can't do much about them, but I think they don't really disturb the landscape or they don't disturb our companies as much because I think we are growing from strength to strength. And I see huge opportunities in this volatility.
Wow. Okay. Just trying to understand how you are thinking and trying to peel a layer beneath what you just said. Would you reckon that there is a possibility that the external environment generated volatility could give a tactical opportunity which is significant in nature? Or do you believe because of local flows, maybe because of even global flows into portfolio schemes such as yours, etc., that such opportunities would be quickly bought into? Because until recently, we've seen most dips getting bought into very, very quickly. Are we still in the same environment, or could there be an extended pullback, if you will?
I think, Neeraj, we need to all recognize that what's happening in our country is something that happens once in a century. So these are structural changes. I think we must use every dip not to think of it as tactically, but to think of it as a huge opportunity structurally. I think, companies are reshaping very well. Landscape is changing. In these last 10 years, we have demonstrated huge stability economically, socially, and politically. So I think India is now standing out amongst all the emerging markets. And now even really, if you ask me, I haven't seen a time like this where we are, even looking better than many of the developed countries. So I think where we are today, this is the start of a super cycle for growth. India is just being, I think, scratching the surface of what we are visualizing in the next 2 decades. And I think there I see a very long and strong runway. The faster we get invested in high quality businesses and stay put, I think we're going to see tremendous returns, the kind we haven't seen in the last 2 decades. So I think a very, very promising story ahead of us. And we should try to distinguish between these short-term volatility bouts. I think that's going to continue to happen because we are in a very unstable world where I think the Western world is going through a structural decline in several areas. And I think that's not something that's going to, see any stoppage. So I think use these opportunities and use these declines to well position yourself and play out all the big themes that India is now basically offering you like a discretionary consumption, a whole new capex cycle ahead of you, exports because of the China plus one and Europe plus one opportunity, and I think a huge FDI that's going to flow into India. So I think look at all of that as structural and use every opportunity, look at it structurally and make inroads into the market, stay fully invested. India's best is still to come.
Wow. Okay, I like the sound of that. Let's try and probe that a bit. There are some, Jiten, and I will talk about the risks as well, because I'm sure you would love to enumerate those too. But first, let me try and knock on the opportunities a bit. There are some which are a natural outcome of what happens when a country goes from a particular per capita to a particular per capita, or the demographic dividend that India might anyways present, irrespective of what the policy moves are. And then there are some policy moves led thing. Call it the Jam Trinity, call it the whole digital infrastructure, what have you. What are those 2 or 3 or 4 really high quality long-term structural themes that you like the most? If you can tell us a bit about those.
Well, I think the biggest of them all, I think, is some amount of structural reforms that are taking place, which are actually ensuring a huge investment cycle. Now, come to think of it, Neeraj, we have not seen any 5-year period where we have seen so much of volatility in the fiscal deficit, but the corporate tax rates have remained at 25.17%. I haven't seen a 5-year period where we have provided this sort of stability in taxation, this sort of confidence, and I think that brings the industry to return back to India, and I think invest back in India. The other big thing I would like to say is that the biggest, I would say, factor that makes me very optimistic is the feeling of optimism, conviction that India is the place to invest, and also the entire feeling amongst Indians that we have arrived. We finally have a leader that's doing a good job, a country which is in the right path of economic growth. So if I look back, maybe 1 or 2 decades ago, all the large industrial houses had invested outside of India. The Tatas made billions of dollars of investments in JLR, in Chorus, in lots of other areas. Mahindra's went and sort of bought out Sangyong. We had Bajaj that built out a unit in Indonesia. We had Kalyani's who took over several forging units outside of India. We had the Birla who took over Novelis. So if you could imagine that sort of capex in 2007, 8, 9, if it came into India, if what would have been Steel would have invested $15 billion at that point in time in building capacity within India. Now, when you look at the current capex cycle, right? Tatas are talking about putting in $90 billion, Reliance $150 billion, the Adani's $50 billion. We're talking about Birla's putting $25 billion. All of it is going back into India. So I think everybody has realized that we've burnt our fingers going overseas. We've already seen what's happened. All of these industrialists have written off. Take an example of Bharti. They haven't been able to recover their investments in 15 years. So, everybody has realized India is the place to invest. They don't have a choice. Tailwinds are there. And not only that, I now see the whole world coming and rushing into India to invest. So I think this sort of confidence I've never seen in the last 2 decades. All the money, all the capex, everything coming into India. And now you capex cycle. What sort of job creation will happen? Where are we seeing our exports? We're seeing several industries coming up. Of course, the whole story has changed.
Yeah, it has. Okay, can I talk about this and the derivatives thereof, then move on to the others? So let's just, because you've seen these markets for so many years, do you sense, for example, that the capex cycle would be similar or better than what we saw in the 2003 to 2008 period? Part one of my question. And is the nature of beneficiaries changing, or do you reckon that, ancillary players, cap goods, so on and so forth, and because of the manufacturing capex, the per capita moving up, then all the urban discretionary, are those the set of intended beneficiaries, or is the nature of this capex cycle slightly different?
So I think, one very important thing people need to realize is that we have arrived very late into the manufacturing party globally. So, India has not been the early beneficiary of the manufacturing cycle globally, where I think China has really scored very well. But the important thing is that I think people are looking to de-risk their supply chains. What is happening today geopolitically is giving India a huge opportunity. And the last decade has been used to build relations with all our allies, provide them that kind of confidence that yes, India is a socially, politically, and economically stable nation. We have it in us to manufacture and export. And I think above all, we are no more in that game to manufacture hats or toys or garments or whatever that China was doing. I think you must take a look at what India is doing today. We are trying to manufacture mobile phones. We're trying to manufacture aircrafts. We're trying to manufacture, semiconductors. Now that's a big, jump, if you ask me. We are leapfrogging several revolutions, and I think this is a very big step to show the kind of commitment, to show the kind of technology intent. So I think government and Indian entrepreneurs have got together and have said that we need to become a very critical part of the global supply chain. We need to demonstrate that India can deliver on very high tech, and also I think become a very important hub for sourcing. So I think the game has changed. It's no more about just some small time manufacturing or export and one opportunity that we were seeing, but I think across several industries, and most importantly, critical, high value add, and technologically driven manufacturing, which I think is the need of the hour for India. So that's what the big difference today is versus what we've seen in the past.
In which case, is there a skew in portfolios between services and manufacturing? In that services have had a traditionally stronger, consistent growth. If you are at the cusp of what you believe is indeed a manufacturing upcycle, is the skew changed a little bit relative to what it would have been for you, say, 5 years ago?
Well, a lot of opportunities 5 years ago across the services. Definitely, manufacturing, which is today probably 17 or 18% of our GDP, needs to go to 25% over the decade. And we believe that that is absolutely possible. And yes, we would be investing in far more, promising manufacturing stories today than what we were doing 5 years ago, because we see that it's not just a promise, or it's not just a pipe dream. It's all happening in reality. So I think manufacturing will get a bigger part of its share in our portfolios, and that's already playing out very well for us.
There are some new themes, and I would love to understand how do you think about these, which are manufacturing led, which have had a promise in the past maybe, but never quite delivered. So 2022 was this rock star year for defense. It's paled in comparison relative, and skeptics argue that they've always had the order book. Why is it that this time should be different? Suddenly railways have come out of nowhere, getting large orders, and companies talk about export opportunities. So there are these themes which have always existed, Jiten. Somehow they've caught catching the fancy right now, and the managements are making the right noises. How do you think around some of these?
So I think some of these are very long-term themes. It's going to take time to play out. I think the winds of direction change that we are seeing are blowing in the right direction. So I think you have to realize one thing, that areas like defense, etc., take some time, and I don't think these are all overnight stories. But I think government intent is very, very clear that we want to indigenize. We don't want to depend on our allies in the West, and I think we want to build our own industry. Now that's going to take its own time. So I think that the direction is right. There are some processes and procedures. We are seeing some timelines that the government has spelled out. It's going to be a little long-termish, but it's going to happen. It is there for real, and I don't see any way where government will change its intent.
Okay. One more question on manufacturing before I even talk about services, and then I'll come to risks, of course. But there are a bunch of these themes that have proven themselves in the past, have hit a bit of a hiccup in the last couple of years, so to say. And people are now wondering what to do here. So spec chem could be one. Textiles always held the promise, never quite became world leader in that stage, but suddenly now seem to be coming to the fore after a brief hiatus, so to say. What do these themes or pharmaceuticals, right? I mean, splendid reputation across the world. The last 2, 3, 4 years have been a long period of a long hiccup, if you will. How do you see these opportunities currently?
So some of these have played out very well in the past. I think pharmaceuticals still is a very big opportunity. For example, not just in US, but Europe, across the board, we see a great amount of opportunity in pharmaceutical exports. And we have a great reputation. There are more US FDA plants in India than in US. And I think industry is going through a little bit of I would say, churn, a little bit of challenges in terms of regulatory challenges posed by the US FDA. But I think they will come out very strongly. And over the next few years, you'll see this continued growth. Plus, you see many of the best companies going up the value chain. So that itself, I think, will result in very strong growth. I don't see any we've also signed free trade agreements with several countries. Many countries enjoyed an unfair advantage and there was no level playing field. But now, if you ask me, we have signed a free trade agreement with Australia, with UAE, about to get it done with UK and many other countries. I think after that, we will demonstrate scale. We will demonstrate that India can get a fair share of its market in the West. And I think that industry is now ready. It's all poised to grow. So, and that's generating a lot of jobs. So I think that's where government focus will be there, and I think government will give all sorts of incentives to see that we really succeed, because employment is the need of the hour. It's the challenge for India.
Got it. 45%, circa 45% of our index is still services, BFSI, IT, and then some more. Just trying to understand. I heard you say that manufacturing, your incremental investing is happening in the manufacturing space. What about these two heavyweight themes? I mean, how do you think about them?
I think banking and financial services will continue to grow. The private sector banking will continue to keep getting market share. And we believe that one of the big themes that will play out is financialization of India. And we believe that we are just at the nascent stage out there, at the cusp of huge growth. So that's another decadal story. We are fully invested there. We believe that India is still not fully penetrated, and we will see huge growth happening in that sector. So I think banks will do exceedingly well. They've come out of a cycle which maybe post-COVID has been a big challenge. But you must remember that banks today are well capitalized. They have got a well-calibrated risk management framework. They have over-provided for their bad loans. And they're at the start of a new cycle where capex, consumption, all of that will now grow. For example, your whole mortgage cycle going to be at a new high. So you're going to see these industries grow. You're going to see them grow very well. And I think they're going to pick up huge market share from PSUs. As far as our software services exports are concerned, I think we have really gone up the value chain. We are a very critical part of what large corporations are doing in the West. And I think that will continue to grow. It may not continue to grow as we grew in 2020-21, where I think there was a pent-up demand. But I think you will see a very high single-digit growth. And by the end of the decade, India's software services industry could be about $400 to $500 billion for the country. And that sort of revenue generation, I think pure value-added exports is acting as a huge hedge against the energy insecurity that we're living with.
Most certainly. Jiten, you guys have access to the best minds as investors from across the world, of large degree of local investing as well. What do you hear from both large global and large local investors about their appetite for not just the long term, but the medium term as well? Are people very constructive on India, or are there other opportunities that people look at because India's relative valuations could be higher? Any thoughts there?
Sure. I think the big challenge we faced a few years ago, prior to COVID, was that nobody was ready to listen to a story from India. So I think post-COVID, when you saw deglobalization, when you saw breakdown of supply chains, I think people realized the importance of India and importance of what Mr. Modi has been doing over the last couple of years to give global investors confidence in our economy. So the one good news is that people have started talking about India, looking at India. They're discussing, whether we should be in India and how big should be India as an opportunity for us. So I think prior to the COVID period, we had a great challenge of convincing some investors who were absolutely sold out in China. They didn't even want to hear your story on India. So I think that has changed dramatically. I think everybody's eyes have opened. They're all looking at India. So all are very, very constructive. I think the second big hurdle was the the valuation syndrome. I think people always find India to be expensive, but I think India is relatively expensive to the other emerging markets, not because of anything else, but I think there's superior performance, there's longevity that the businesses ensure, and the kind of visibility of the growth. So I think comparing ourselves to a Russia or a Brazil or any other part of the world does not make sense. So I think when you take a look at long-term large institutions like the pension funds, they're very constructive, they are well invested in India, and they continue to increase their commitment towards investing in India. So I think that is a very, very big positive. But a lot of people sitting on the fence. But I think as things improve, and I think we have Mr. Modi back in 2024, large amount of people who are on the fence, I think, will be back in the markets here and will continue to repose their faith in the Indian economy and in the market. And you'll see huge amount of FDI and huge amount of money in equity markets coming in.
Okay, okay, that's good to know. What are the risks to this, aside of the obvious political piece, I believe that you would refer to, and do mention that also, but if you want to, if you feel, of course. But what else is a risk to this promising India story?
So I find this is your toughest question because I keep scratching my head every day. And when I look at what's happening around me, I haven't seen the Fed interest rate at 4.755 and RBI at 6.5 in nearly 3 decades. So I think the interest rate differential is as low as 1.5%. Inflation, I think, we are far better than what's happening in the West. Currency, I think the dollar is rallying, but, against the rest of the currencies, the Indian rupee has fared very well over the last decade. So when I keep looking around, we have done some good work. And structurally, I think India has positioned itself well. It has demonstrated great resilience. So I think all the challenges I see now are external. Our tax rates are competitive. Inflation is good. Government is very much pro-business. The kind of PLI schemes that they have encouraged, industry to invest in. So I see all of this as great positivity. So I think the challenges to my mind are we need continuity of reforms, which means we need a stable government back at the center. We need this same government to continue at least for another 1 or 2 terms, and I think continue with the reforms and make this as a very attractive destination for huge investments to come in. The risks that I see today are major geopolitical risks globally. What happens if China decides to acquire Taiwan, and you have a whole breakdown of supply chain, etc. I think that could disrupt in terms of energy prices when we saw the war that started off in Ukraine. So these are all the issues that we find are very big, very serious, which we hadn't seen countries being so hostile maybe a decade ago. It was very difficult for us to imagine that there'll be a physical war. But I think the way we keep talking today, I think it's not ruled out in many parts of the world. So I think that's the challenge we think is very big. Otherwise, people don't even talk of food security. We are not importing anything today. I think all our go downs are overflowing with grains. We have never felt that pressure in the last 24 months of any food insecurity. But when you look around, a lot of countries are actually reeling under huge pressure. So I think something right that we have done in the last decade and few decades back for food security, that India is absolutely well placed. So we're looking okay in terms of energy. We're looking okay in terms of exports. So I don't find these challenges here. And within 2 decades, I think India should really be very, very well placed to become a food basket to the world. So I find that these opportunities are all untapped. The challenges for us is government's continuity. The challenges for us are geopolitical things, movements globally. And I think the complete breakdown of an orderly world in business, because you find that today there are huge challenges, with deglobalization. So there is, globalization was exactly producing where it was most cost effective and selling where it was most profitable. But today, I think everybody is trying to put artificial trade barriers. So you're seeing huge capacities coming up for everything across the world. And, we are replicating capacities. And, if the world comes back to order, then there'll be huge surplus across commodities. So these are all the challenges that we see. I think otherwise, I find it very difficult because we're doing all the right things.
Well, Hopefully, all of that continues. Jiten, it was a pleasure talking to you today. Thank you for taking the time out and giving us some idea about how you guys at Enam are thinking about these things. And all the best and happy investing for the rest of the year. Look forward to, of course, have you more often on the conversation platform.
Sure. Thank you so much, and it's a great pleasure to be here. Thank you.
Thank you, and viewers, thanks for tuning into this edition of The Talking Point.